Hey everybody, this is Alan Hensley from Merriman Wealth Management, and today I have a conversation with Shelly Baker from Refined Realty Group. She is a realtor in the greater Seattle area. Her and her business partner, Rich Tao, have been doing this for a long time, and she has a lot of great insights into what's happening in real estate right now in Seattle. And then if you have any questions, or if you're looking for a real estate agent, I recommend that you reach out to Shelly. I'm going to put her information and link down below. Of course, if you have any questions, send me a message up above or reach out, put something on my calendar. Thanks so much, guys. Hope you enjoyed the conversation. All right. So we are now recording.
Awesome.
Thanks for doing this. I really appreciate it. And
Yeah, it's my pleasure. Thanks for having me.
it's a crazy time right now, to say the least.
Yes, to say the
Just real
least.
quick, I'd love for you just to introduce yourself a little bit, just kind of, yeah, your name and just kind of what you're doing.
Okay. Hey, well, my name's Shelly Baker, and I've been a realtor in the greater Seattle area for just a little over 20 years. My business partner, Rich Tao, and I have been together for, gosh, going on 10 years
Oh,
now.
wow.
And yeah, so, um, the real estate market has definitely gone through its ups and downs during my time in real estate. So it's in some ways kind of nice that I got to experience a little bit of uh, the time of the recession,
Yeah.
to kind of understand how to shift in this kind of market. We've got to implement, like you are, new strategies.
Right.
To a ever changing market.
Yeah, it's interesting. I got started as a financial advisor in the fall of 2007. So if you remember, that's kind of when everything was just going great,
Yeah,
a
yeah,
whole new economy, and then yeah, it just fell off a cliff. So
yeah,
I try to describe my entrance into the industry, trial by fire, sink or swim, whatever analogy you want to use. But
yeah,
I learned a lot really fast. So hindsight's 2020. I'm glad I went through that. But
yeah. That'll do it.
yeah, yeah, exactly. And it's just it's been, I don't want to say totally smooth sailing for the last 10 years, but it feels like, the stock market has been on this steady climb. The real estate market has been on this steady climb ever since the early 2010, 11, 12 time frame.
Hmm.
And for, a lot of people that I talk to, they have experienced their entire careers during this bull market. Maybe they got out of school in 2010. So this is relatively new for a lot of people. I just like to remind people that, hey, yes, we haven't ever gone through a pandemic,
Yeah,
but we are going through something that's at least somewhat similar in terms of it's a recession. We've all got to hunker down. We've got to, just like we were talking about at the top, kind of reevaluate our expenses. But for someone that was about to sell their house or thinking about buying a home this year, that's got to be just like another added stress, don't you think?
yeah, I do. And I think a lot of people have kind of gone into hibernation a little bit, which is to be expected. But I mean, just for a little bit of perspective, the market really got off to pretty much an unexpectedly crazy start for
Right.
buyers this year. There was unexpected demand, low supply, and as is typically early in the year, it led to intense bidding wars. So right before the COVID hit, houses were selling for 10% or more than the listed price. And that wasn't uncommon to be seen, and to be seeing five or more multiple offers, which that level of activity is pretty unusual in January and February here,
Right.
you
Right.
know.
And that was kind
Um,
of setting the stage for like a really strong spring,
yeah,
right?
yeah. I mean, we were all guns going forward, of for the year, really, our pipeline was looking great. And, I think buyers and sellers, were kind of in the swing of things. They had felt this before,
Hmm.
a couple years ago when we had that surge. And I think everybody was kind of used to it and knew, okay, we're back here again. We've got to sort of prepare to win, and write the love letter to the sellers, and compete. And there were a lot of waived inspections or pre-inspections
Hmm.
on properties, more cash offers, people kind of coming out of the woodwork. And with the interest rates being low, that sort of set the stage for just buyers thinking we need to jump in here now,
Right.
before prices really get a lot higher.
And that's, something that I've been hearing the word hibernation a lot when it comes to
Yeah,
the economy, when it comes to, just what we're all doing with our daily lives right now. And another phrase that I've heard is pent up demand. It
yeah,
feels like there's this, just like you mentioned, everyone just kind of hit the pause button
yeah,
on what they were doing in the real estate and across the economy. And there's this, I'll say, optimistic point of view that once everything it gets back to normal, that wave of demand is going to come back. And now the question is, how quickly will it ramp back up again? But just from kind of what you're seeing in at least the Seattle area, are there people that have expressed, yeah, we're just kind of waiting things out, we're going to ride out the storm, and then yeah, come summer, come fall, we're going to call you again? Is that what you're hearing, or
yeah. I mean, we're kind of seeing it both ways. We've definitely been working,
yeah,
and we definitely have clients who are seeing this as a potential opportunity, I would
okay,
say, to possibly get in on a market while interest rates are still low, and maybe seeing this as an opportunity where they won't have to compete with 10
right,
other parties. It's sort of situational, I would
mhm,
say, because it depends on a person's a lot of things, their motivation to
sure,
purchase, their need to purchase, and, sort of how long they're going to be there, whether or not they can sort of take the risk of
hmm,
that we might drift into a deeper recession. And of course, just like, being in, a wealth advisor, that none of us have a crystal ball, and the difference really, I mean, with real estate investment vehicles versus stock investment vehicles, is we also have to live in our home, and so it's
right,
a little bit more, or could be a little bit more of an emotional thing than
hmm,
people even seeing it as an investment. But that said, people don't, they remember the crash and they don't want
yep,
to lose their shirt. They don't want to be back there again. But, I think a lot of people also realize that the reasons that led up to the housing market crash in 2008 are not things that are prevalent now. Those
exactly,
things were mostly fixed, and so I think this wasn't the housing market leading to the crash.
right,
This was a pandemic leading to a little bit of a pause in all the markets. And I think you're right that that is going to be pent up demand. We're kind of just seeing this as a little bit of a log jam, and
hmm,
then the floodgates open again. Should interest rates stay low, once we kind of get out again in public and people feel more comfortable getting out there, I don't think there's going to be any reason, should the stock market stay high, relatively too, that people won't kind of get out there again, dip their toe in the water, and then start buying and selling again.
yeah. And I love what you mentioned. There were a lot of lessons learned from what happened during the Great
Yeah,
Recession, and not
absolutely.
just not just on the consumer side, but obviously the banks and the lending agencies, they've
Hmm.
changed a lot of their processes. So it's good. It's good to hear, and it's good to see that people are remembering. Sometimes I get
Yeah,
afraid that everyone kind of forgets what just happened, even though it was 10 plus years ago. Uh,
right, right.
and it's if it's cutting down your expenses, if it's tightening the belt a little bit this year, those are all great things, and those are the lessons that hopefully will stick after this recession as well. But I love the fact that people are still getting out there, and you and Rich are staying creative in how you show
Yep.
homes and how you communicate with sellers and buyers.
Yeah,
Just walk me through a little bit. What is the obviously open houses are gone, uh,
right.
but showing a home, are you using a camera? Are you using Zoom more now? How does that
Yeah,
work?
yeah. We've set up some Zoom meetings, some just basic FaceTime
Yeah.
a couple of times when we do showings. But I mean, home showings definitely take longer, for
Right.
sure. They're
Yeah.
taking longer. We're only allowed right now to take one buyer through the home at a time. So open houses, as you mentioned, are not allowed.
Hmm.
And companies that stage homes now and put for sale signs in the yards are not really considered essential services. So some of the things that usually happen are a little bit different. We're seeing some more virtual staging. So there's
Okay.
companies that will do things like virtual staging. So, sometimes when the buyer gets there, they're like, what's going on? This is empty. And it looks so
Right.
pretty in the pictures. But, some marketing for sellers has been severely limited. But, we go in, we take one buyer in, and then we come back out, and then we take the other buyer in, which is kind of weird because if they live together, but I get
Yeah.
I get why the rule exists.
Sure.
And I'm masked up and gloved up. I'm trying to keep it so that I'm not, getting other people out there, just considering that I could be a vessel, and
Yep.
I'm wanting to visit my mother and social
Right.
distance from her. So we're trying to take all precautions and really be, follow the guidelines that Governor Inslee's laid out for us.
Yeah, and that's what, we're all kind of waiting to hear what the next set of guidelines is going to be,
Yeah,
because there's so many questions about what's the plan. Of course, everyone wants to
right.
know when, and we wish there was a magic switch that we could flip where everything's back to normal, but we
Yeah,
understand it's going to be gradual, it's going to be different. So who knows what that's going to look like? But
yeah, yeah,
I love the creativity, getting the virtual staging. I hadn't heard of that. That's
yeah,
something for
yeah.
people to be aware of.
Yeah, could be a company that you might suggest people invest in.
It's with the technology and the virtual reality and everything these
Right.
days, you could definitely, it feels like you could shop for a home
Yeah,
from your couch, but obviously, just like you mentioned earlier, a home is a very emotional purchase. It's
right.
also something that you touch, it's a real asset.
Yeah,
So
very rarely would I say that a buyer has bought with just sight unseen.
right, right.
Most of the time they want to actually physically be there.
Yeah.
I would say even if people are um, kind of that right brain, like, put it in a spreadsheet, they
Yep.
still have to get that gut feeling. Does this feel right to me? Can I live
Yeah.
here?
You got to see the neighborhood too. You got to,
Yeah,
yeah, it's a whole new game for buyers and for sellers. And then obviously, seeing the
right.
property, there's more than one way to do that, it seems like. Um, from the other side of the coin, I was hoping to get your perspective on lending a little bit.
Huh?
The mortgage process from my clients, what I'm hearing is it's taking a little bit longer. And it's not just because of COVID-19 in terms of, communications a little bit slower, but lenders are asking for more information, or maybe they're asking for higher standards. Are you hearing
Yes.
that from the buyers that you're working with?
Yeah, we've been hearing that. I think that there's kind of two parts to that. I think lenders are getting a little bit more skittish. They want to make sure that
Yep.
people aren't going to be losing their jobs, so they're kind of spending a little more time with files and underwriting. Um, but also, I think they were really inundated with refinance files.
Yeah. Yeah. Good
So,
point.
interest rates are really low right now. They briefly spiked a little bit last month, but they've been trending downwards again ever since. And lower interest rates definitely help buyers increase their buying power, which
Yep.
is really helpful in this relatively expensive region.
Sure.
So, I do think that, where we were seeing some lenders able to close a loan early, like they knew that because it was a competitive market, they had to be able to rush things through in 2 to 3 weeks. Now we're seeing lenders want to take just a little bit more time, be a little bit more careful with their files, and that might be partly because they're trying to be careful, or partly because they're backlogged with refis. Although typically they will put home sales in front of a refi to
Right.
prioritize their files. But yeah, we're seeing that.
And as long as a buyer goes into it knowing that it might take a little bit longer than it did a couple months
Right.
ago, that's just something that you have to
Yeah,
have that
yeah.
conversation
And
front.
we're seeing sellers understand and be a little
Good.
bit more patient with that kind of thing too.
Right.
Everybody, I think, has maybe upped their level of patience a little bit and understanding. We had a form called a force majeure form earlier this year that was really something that we put into effect right when this started to happen, just in case of unforeseen circumstances, in case of the lockdown
Right.
and that sort of thing. And people just got to understand, like, we have to sort of be patient here, and unforeseen circumstances can happen with, it's not really a natural disaster, but it's, could be governmental shutdowns, which
Right.
did happen,
Yeah. Yeah.
so
That was good foresight. That's
yeah,
that's
yeah,
good that you had that in place. From the
right,
the world that I work with, there's a lot of uncertainty, and the stock market hates uncertainty. That's why we're seeing these huge swings up and these huge swings down.
yeah,
In the stock market, the way that it works is it's trying to, foresee what's about to happen based on what's currently happening. And obviously, that's just like you said, there's no crystal ball. What we're working with, what we've got to work with right now, is data from a month ago or a couple months ago. But the April data is going to be coming out soon,
mhm.
probably within a couple weeks into May. Uh, do you think that is going to, I don't want to say spook the market, but do you think that's going to shed a more realistic view of what's happened? Because obviously COVID and the lockdown didn't really happen until early March. So that data is kind of a tale of two time periods.
Right.
Do you think any changes are going to come from buyers and sellers based on what we learned, what happened in April?
Yeah, I mean, possibly. I guess this sort of depends on how much we open up here in the next week or two.
Right. Yep.
I think that's going to tell a lot within the next couple weeks. I think we're hearing a lot about the effects that the stock market is having, with buyers and sellers on their down payments. And they're I don't know what you're advising your clients who are preparing to make a big purchase, for a home, but like what they should do with their money. Sometimes when this happens, it just is situational, right? It depends
Right.
on a person's, where their down payment is coming from and how much of that is tied into the stock market.
Right.
So I don't know what you're kind of advising clients with that, but we definitely have buyers and sellers who want to know how things are going to shape up after we get back to business as usual,
Yep.
um, as we progress towards the new normal. you know,
Yeah. Yep. Yeah. That's a good.
yeah. So we've been sitting in on meetings, with different industry analysts, economists, and panels in our office, meetings, interviews with other brokerages, and I think most people are having kind of an optimistic outlook that we do have some pent up buyer demand, and we're going to have a strong summer season.
Mhm.
So I think kind of right now, given the number of pending sale properties, that are being reported by the MLS, we think we want to believe that we'll be looking at a good housing market recovery, and that we think that instead of it, like what happened with the recession, of it hurting the general economy, we think that's going to help bolster the general economy. But the stock market and the housing market are a little bit tied together, just because even though they might be different investment vehicles, a lot of times people will pull their money out of stocks to purchase a home. So yeah, I mean, we'd love to hear a little bit about what you're advising your clients in regards to that.
Yeah. In a perfect scenario, any sort of short-term goal, like buying a home in the next couple of months, or even in the next couple of years, ideally you'd have that money set aside in cash. Let's just start with best case scenario.
Right.
A no risk investment is where you should be putting your money for any sort of big purchase in the near future. But I totally understand. I
Yeah.
have clients, and you've talked with people that a big chunk of their down payment is going to come from stock markets, mutual funds, something that's not already set aside in cash. So that's where it's just really important to have a plan. It doesn't have to be a perfectly put together financial plan, but ideally, let's talk about the people that are looking to buy a home to live in. This is something they're going to be in for the foreseeable future. So it's not a house they're going to flip. It's not a house that they're going to turn into a rental right away. This is what we would consider a long-term investment. And if you keep the long term in mind, what we're going through right now, we believe the US economy, the world economy is going to recover. It's eventually going to get back to growth. I'd love to know when. Is it going to be in a couple of weeks? Is it going to be in a couple of months? Is it going to be in a couple of years? We don't know exactly when, but we do know the long-term trajectory of the stock market and the real estate market is a return to growth. So keeping that in mind, yeah, pulling from investments right now, of course, it's not the perfect time to do it, but you never know when the perfect time to do it is. If you're taking money out of your portfolio to put down as a down payment on a home, you're just moving one long-term investment to another long-term investment. That's one way to think about it. So it might sting a little bit, but as long as it doesn't negatively impact your financial plan, then it's not a bad move to do, even though you're down right now. We could really get into the weeds and say, hey, maybe you'll do some tax loss harvesting this year. Maybe you've got some investments that are down that you can sell at a loss. It's the thinnest of silver linings, but getting to write off something on your taxes, for some people that could be appealing. So obviously everyone's situation is different. You've got to keep the long-term in mind. And then most importantly, you've got to have your budget really wrapped up. And this is where, as a human, we're not hardwired to do budgeting, the figuring out the spreadsheet of all of your investments and then all of your expenses and just making sure that you know exactly how much you're spending each month. Most people don't do that. I'm going to be totally honest. Most people don't, and most people don't need to. But more importantly, you need to do what I call kind of reverse budgeting. You need to look at how much you're making each month, and then you need to look at and see how much you've got left over at the end of the month. It's kind of back of the envelope budgeting.
Right.
But if you've got a positive number, that's good. We're moving in the right direction. But hopefully, with your income, you've kind of sliced and diced it. You've got some going to a retirement account, like a 401k, if you have that at work. You've got some going to an emergency fund. And then, of course, you've got to figure out your mortgage payment or your rent payment. All those things need to be taken care of so that at the end of the month, the amount that's left over, we love to call that your guilt-free spending. This is the money where you can go on a vacation, go out to dinner. It doesn't matter because all the other things are taken care of first. If you don't have guilt-free spending, that's a problem. And we just need to make sure that when anyone's looking to buy a home or make any sort of investment, especially if you're thinking to get a mortgage, that you're still going to have guilt-free spending left over at the end of the month.
Right, right.
So,
well, I had another question for you because we've got several clients who are nearing retirement age. Mm-hmm. And, what are you recommending to older folks who don't have maybe decades to recover from stock market losses?
Yep. So number one, it's really important to have a rainy day fund, a cash fund. For someone that's working, maybe they're mid-career, 3 to 6 months worth of expenses, that's a pretty healthy emergency fund. For someone that's either retired or just about to make the jump into retirement, 6 to 12 months worth of expenses saved up in cash in a savings account. That's probably a better target than the 3 to 6. So number one, increase what your rainy day fund looks like. But the one point that I have to make is retirement is not the finish line. So that's one I don't want to call it misperception, but something that I don't know why a lot of people don't think about. When you retire, you've still got a big chunk of life to account for. Hopefully you've got 20, 30 plus years that you're going to live. And, I have clients that have been retired longer than they worked.
Right.
So, just kind of think about that. Even though, yes, we're making the jump to retirement where there's no income, you're moving from what we call an accumulation phase to a distribution phase. But that is not the time to put all the money under the mattress, so to speak. So it's really important. And a lot of people love the idea of bucketing. You've got the safe, secure bucket. That's that 6 to 12 months cash. And then you still have long-term investments. And long-term is still 20, 30 plus years. So retirement's never the time to dial risk all the way down to zero. Again, you still want to make sure that you're taking some risk because you've got to outpace inflation, and you've got to make sure that you've got enough money later in life when unexpected expenses pop up. For a lot of people, that's medical expenses. So,
right.
Yeah, I guess the one takeaway is retirement is definitely not the finish line.
Yeah, yeah, it's yeah, that's interesting that you say that. Of course, a lot of people are starting to retire earlier, and
Yep.
that they're living longer in retirement than they did working.
And that's, a relatively new phenomenon is, yeah, people would, retire and have 20 to 30 years of retirement to plan for. But now we're seeing people need 30 to 40 years of retirement that they need to account for. And that just means you need to have a portion of your portfolio still growing, and you still need to take risk in it. So it's really important to have the rainy day fund, maybe increase how much cash you have on hand. But yeah, don't forget, you've got a long, hopefully enjoyable retirement that
Right, right.
you need to
So
stay
with
invested
your
for.
clients, are you advising, what are you advising your clients about the money they've already invested in the market?
So, here at Merriman, our investment philosophy, number one, is based on diversification. And then riding out the storm is kind of the biggest message right now. It's easier said than done. I don't want to, kind of water down that it's hard to do that right now. But if you have a well-diversified portfolio and you have a financial plan, this is the time to not do anything emotional. So don't think you can time the market. Nobody can say nobody can time the market. There's a lot of people that say they can, but nobody can. So
Right.
it's in if you're in a good place financially, which I don't want to downplay. A lot of people right now are going through hardships. So obviously this advice isn't for everyone. But as you mentioned earlier, this is an opportunity. Again, if we're keeping the long term in mind, putting some cash to work, or definitely don't stop making contributions to a retirement account. I've had some people that are either early on in their career or maybe they're mid-career. They say, hey, Alan, should I stop putting money in the 401k because the market's so crazy? Absolutely not. That's you should be doing the opposite. If you can, put more money in the 401k because you've got all this time for that money to grow. So why not put it to work? So, if someone's in their 40s or 50s, or someone that's got retirement that's still a decade away, and let's say they've got 24 months worth of cash on hand and they don't need it, they don't have it set aside for a home purchase or something, I would consider at least talk to someone about getting some of that money invested.
Yeah, someone like you, of course.
Yeah, of course. Yeah,
Or
it's
exactly you.
yeah, it's what I'm doing personally. There's different ways to take advantage of what we're going through right now, but it it's obviously very different for every single person. So I don't
Right,
want to just paint everyone with a wide brush and say, look, everybody do this. But yeah,
right,
it's definitely an opportunity. Just like you mentioned, if this is the time, if you've got the money already set aside, interest rates are really, really low.
right.
Do some call Shelly and do some
Yeah,
home
yeah,
shopping.
yeah. Call Shelly and Rich.
Yep. It's and that's the other thing is for the people that are in, let's call it hibernation mode. That
Uh-huh.
doesn't mean you don't have to do anything. Still, reach out, make those connections. At least put yourself in a position so when the economy gets kickstarted again, you've already got this relationship built so that you can hit the ground running. That's another thing that I'm telling people is, yeah, the economy's in pause and we're all kind of stuck in this Groundhog's Day thing.
Yeah,
But that doesn't mean you have to be idle. You can
right.
start
No,
putting
that's
the pieces
great. That's
together.
great advice. Yeah,
And if
yeah.
the sun would stay out here in Seattle, I think that would help a lot of us.
Although I see that as sometimes a little bit harder, because people
Yeah.
want to then get out, get to the park, and then there's too many people out and about.
That's true. It is. It makes the social distancing a little challenging
Yeah.
in terms of all the places that us Seattleites go to.
Yeah. These next couple of weeks are going to be very interesting and telling.
Yes. Yeah. Exactly. I love hearing about what's happening. Again, I
Yeah.
read the news. I jump on all the different forums that talk about the real estate market, and there's people from every side. I love to get a firsthand perspective. So yeah, I thank you so much for jumping
Yeah.
on
This is
the
great. I
podcast.
love that you're doing this.
Well, awesome. And yeah, maybe,
Yeah.
I love the idea. Maybe one day we'll do kind of an open forum, a Q&A. We'll have people send questions in ahead of time.
Oh, yeah. That would be
That'd be
good.
cool.
That would be good. Zoom in their questions
Yeah.
on
Yeah.
the
There you
chat.
go.
We've got a question from Cindy in Kirkland.
Yeah, that's right. Yeah, we'll do some shout outs. I don't know, maybe we'll
Right?
do a call in. We can
Uh-huh.
experiment with that. Well, again, Shelly, thank you so much.
Yeah, you bet,
I
Alan.
know you're staying busy. I love that we're staying connected. So if anything ever comes up, don't hesitate to reach out. But yeah, thank you.
Yeah, and vice versa. You
Yeah,
too, please.
absolutely.
Yeah, this was fun. Thank
Cool.
you.
Yeah, thank you.
Thanks for
Have a
having
good one.
me. Okay,
Thank
you
you.
too. Talk to you later.
Talk to you later. Bye bye.
Bye-bye.